Even though Meet Kevin and Stephan are in the title of this video, I promise you that I am not going to talk negatively about these two. I'm going to use them as an example, because in this video, I'm going to talk to you about the difference between microcap stocks and penny stocks. And the reason why I put Meet Kevin and Stephan in the title is because I'm trying to become a better YouTuber. You see, this year I stepped up my YouTube videos starting in January, and I took a course, a Stephan YouTube course, and I am taking some of the tips from him. So for example, I improved my thumbnails, I improved my description, I improved my titles. And in the titles, if I put Stephan and Meet Kevin, I'm gonna get more clicks. And also, Stephan said that if you wanna get more clicks, you wanna talk about somebody. You want to gossip about somebody else. Who is better to gossip about or to use them as an example if it's not Stephan or Meet Kevin, of course. If you're new to this channel, my name is Mariusz Konieczny. I run MicroCap Explosions, a website dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free, not paid, a resource to make you a more intelligent investor. What's the difference between microcap stocks and penny stocks? You see, this is so typical for people not to understand the difference. And why am I talking about it? Because when Meet Kevin canceled our 20-minute coaching session, he wrote me this wonderful email saying that he's not interested in doing the session because he's not interested in pumping and dumping microcap stocks, and in the same email he used the term penny stocks. So it made me think that if somebody like Meet Kevin doesn't understand the difference between microcap stocks and penny stocks, and many others don't understand the difference, so that's why I'm making this video. So when we are talking about microcap, at the end of micro is a cap, which is CAP, which stands for market capitalization. In other words, equity in the company. So when you have a market cap, it's number of shares times the price per share. That gives you the market cap. And companies can be categorized in different market caps. You have micro caps, small caps, mid caps, large caps. And different people might have different definitions exactly where the category ends and where the new one starts. But I always like to say that micro-cap companies are companies that have market caps of less than $100 million, okay? That's what makes it a micro-cap. Now, micro-cap might be a penny stock, but it might not be a penny stock. Penny stock is a definition that has to do with the price of a stock, one particular stock. So if a stock of a company is trading for $5 or less, it's considered a penny stock. It's weird. It should be less than $1, but the definition is less than $5 is considered a penny stock. So let me give you some examples. Berkshire Hathaway, for example. Berkshire Hathaway, one stock, the A stock, is almost $500,000. The market cap is about 700 billion. So clearly, Berkshire Hathaway is not a micro cap, it's a large cap or huge cap, whatever you want to call it, and it clearly is not a penny stock because one stock is $500,000, right? If you look at a company like Oracle with the ticker symbol OCO, the market cap is over 200 million, yet the stock price in Canadian dollars is about $1.30 as of the time that I'm recording this. So Oracle is not a microcap anymore because the market cap is over 100 million. But because the price of a stock is less than $5, it is a penny stock, right? And when I first discovered Oracle in 2017, the stock price was at 4 cents. The market cap was 3 million. So at that time, Oracle was both a microcap and a penny stock. And as the stock price and market cap appreciated, Oracle lost its status as a microcap. It became a small cap, but because the stock price is still less than $5, it is still a penny stock. If we use an example of Voxter, Voxter went through a similar situation. When I found Voxter first, it was both a microcap and a penny stock. Today, Voxter has a market cap of close to 500 million, yet the stock price is trading for now less than $1. Therefore, it is not a microcap from the market capitalization, but it is still a penny stock. Now, as you know, because I've talked about it, Voxter is looking to uplist to TSX, Toronto Stock Exchange, which is a level up from TSXV, V standing for Toronto Stock Exchange Venture. And when it does so, and also when it uplists to NASDAQ later this year, and when they do a reverse split up to 20 times, the stock can trade anything, nothing changes. It could trade as high as $20, like based on that transition. Or if they do a less, it might trade, at 10. Because in order for Voxter to qualify to uplist to NASDAQ, the stock price has to be over $5 because NASDAQ doesn't want any penny stocks, right? So at that point, Voxter will lose its status as a penny stock. And it already lost its status as a microcap stock. Right now, it's still a small cap or mid cap, whatever, and it is a penny stock. But when it does the reverse split, it will not be a penny stock anymore, and it will not be a microcap stock because it's not a microcap stock, of course, assuming the stock won't go down anymore, right? And then you see, when that happens, you see a lot of things will change because in the minds of investors, in the minds of people, when they see a stock price of more than $5, they're not afraid anymore because people are afraid and petrified of penny stocks. But that simple reverse split will make it be less terrifying to look at Voxter simply because of the stock price. The value will not change, the market cap will not change, simply because it will have a stock price higher than $5, it will automatically become a different category and more people will look at it because they're not going to be terrified. If you look at a stock like Secure, for example, that company, because it has a market cap of about 30 million and a stock of about 30 cents, it's both a micro cap and a penny stock, right? It fits those categories. If the market cap surpasses 100 million, then it will not be a microcap anymore. And if the stock price goes over $5, then it will not be a penny stock anymore. But as of now, Secure is both a microcap and a penny stock. Let's use another example of a company that was actually included in the wonderful book, How to Profit from Coronavirus Recession, Licht Corporation. They provide internet and phone services in rural areas, and their stock price today is about $22,000 for one share. The market cap is about 400 million. So today, it is not a penny stock and it is not a microcap stock. But you know what? About 10 years ago, the stock price of Licht Corporation was only 3,000. I said only. Was 3,000 and the market cap was less than 100 million. So even though the stock price was $3,000, definitely not a penny stock, it was a microcap. A microcap that people like Meet Kevin, for example, don't understand the difference. They think it's all the same. They think that a microcap is a penny stock and a penny stock is a microcap, right? But Licht Corporation had a stock price of $3,000 10 years ago and a market cap of less than 100 million. Therefore, it was not a penny stock, but it was a microcap stock. Now, let's use examples of companies that, for example, Meet Kevin was talking about on his YouTube channel, and I featured in my video when I said, don't cancel Kevin. One of them was Shift Technologies, which is a company that, does used cars sales and buys online. And this was a company that was both a regular stock, so it wasn't a penny stock. It was not a microcap stock when he was talking about it. It was a small cap. And now, after this huge decline, Shift Technologies became both penny stock and a microcap stock. So again, when the stock was high and he was talking about it, it was a small cap and it wasn't a penny stock. After it declined hugely, it became a penny stock and a microcap stock. If you look at another company that he was talking about, Arcimoto, which has these electric toys, electric little vehicles, it was also a small cap stock and not a penny stock. But now that it declined so much, now the stock is a penny stock, but it is not a microcap stock because it has a market cap more than 100 million. You see the difference? And then there is something called microcap exchanges. I mean, I make up this name, microcap exchanges, secondary exchanges that a lot of microcap stocks and penny stocks trade on. And they are OTC, over the market, Toronto Stock Exchange, Venture, and Canadian Stock Exchange, CSE, AIM, in London, and then I don't remember the one in Australia. But those are secondary exchanges that attract microcap and penny stocks, right? And actually OTC is not really an exchange, it's a quotation system. But from our point of view, the way you buy those stocks, you can't even see the difference. So let's just for now call it an exchange. And now, just because something is a secondary exchange, or you can call it penny stock exchange or microcap exchange, doesn't mean that all the companies that trade there are penny stocks and are microcap stocks. Because, for example, again, going back to Voxter, Voxter trades on TSX Venture. Voxter is not a microcap anymore because it has a bigger market cap. That's why Voxter is moving out of there, because it needs to be on a better exchange. Oracle, the same thing. It's not a microcap anymore, yet it's still trading on the exchange. Oracle, if it wanted to, it could uplist to TSX Venture, the main board, but for some reason they're not doing it. They're staying on that exchange. Another great example is OTC Group, that also was included in this fantastic book on coronavirus. OTC Group, if you look at the chart over the many years, it delivered a 10x performance. Today, OTC is a $60 stock and a market cap of 700 million. So you can see that OTC, what is OTC Group? OTC Group is the company that owns and manages the OTC market. Like all of those penny stocks that trade on that quotation system, OTC Group owns it. And OTC Group happens to be a publicly traded company. So of course, OTC could very well be listed on New York Stock Exchange. It could be listed on NASDAQ. But since OTC is about OTC, it might as well trade on OTC, right? So this is an example of a company that is not a microcap, is mid-cap, and yet it's still trading on OTC, which, people think the whole thing, it's, dangerous and you shouldn't go. And I agree with this. 80 to 90% of the companies that trade on those exchanges are uninvestable. You and I want to focus on the 10 to 20%, and definitely OTC Group belongs in that quality companies that, even though they trade on those microcap or penny stock exchanges, they're fantastic companies, and obviously they deliver fantastic results for their shareholders. Why? Because the business is strong. And now this brings me to Graham and Meet Kevin again, because you see, I know that Graham knows that I wanted to be on the Iced Coffee Hour, a podcast. Okay, I know that. He watched some of my videos. And then he doesn't want to have me because he has the same impression that Kevin had when he looked at my videos and he looked at my YouTube channel. He's a pump and dumper focused on microcaps and penny stocks. So it's clear to me that, well, first of all, I understand they don't have the time to look at me and analyze what I am about. So they just put me in the same category of penny stock promoter. Now, what I find interesting about it is because if they understood the difference between microcap stocks and penny stocks, they would realize that they themselves fall into the category of microcap stock or microcap companies. Think about this. Graham and Meet Kevin are YouTubers. Their business is YouTube. Graham makes it honest that it's about YouTube. Meet Kevin is a YouTuber. It's all about YouTube, but he likes to tell you that he makes money investing. But really, even the Wall Street Journal, when they did a piece on him, talked about how his business is YouTube, okay? YouTube, ad revenue, selling courses, now 20-minute coaching sessions, right? Which he canceled. That's what his business is about. And then he gets people to watch his videos because he talks about investing. But he talks about investing, but his business is YouTube, right? That's the reality. He tries to hide it, but Graham is open about it. So if you look at the amount of money that these guys make from YouTube, Graham, let's say he makes 10 million a year. Meet Kevin, made 22 million 1 year. And so let's say he also makes 10 million. So what kind of company or business would you call it a business that makes $10 million a year in revenue? If you took this business public, or if you valued that business, it would be a microcap company, right? Because it would probably be valued, I don't know, 20 million, 50 million, depending on what multiple you want to put on it, and what bottom line it generates. But it would be worth, maybe, let's give it to them. Each of their businesses is worth 50 million. 50 million is below 100 million. So their business is a microcap business, okay? They are in a microcap business. So even though they are in a microcap business, I am in a microcap business from a different perspective. I buy into microcap businesses, but from their point of view, I'm a stock promoter, I am a pump and dumper. But them, even though their entire world is about microcap business, it's okay for them to be in the microcap business, but it's not okay for me to be in the microcap business. I use the same example with real estate. People will buy a 100-unit apartment building for $4 million or $5 million or $10 million, whatever. They will put their entire life savings, their entire friends into this, and that's okay. Privately, that's okay. But if that same apartment building was put into public vehicle and listed on a CSE, Canadian Stock Exchange, all of a sudden that would become a pump and dump, microcap, don't touch it. See how ridiculous it is? Privately, it's okay. It's okay to be a microcap business as long as you don't realize that you're in a microcap business. But if you own microcap businesses in a public market, well, then you are categorized as a pump and dumper and you are engaged in a risky business. So I hope that this explanation was helpful to you. There's a huge difference between microcap stocks, microcap companies, and penny stocks. Huge difference. Now, just because something is trading for less than $5 doesn't make it more risky or less risky. Just because something is trading for more than $5 doesn't make it less risky or more risky. What matters is the business behind it. What matters is whether the business, number one, generates revenues, generates profits, or if the business is going to generate profits or revenues. That's what matters. Fundamentals is what determine the success of the company. So focus on that. The stock price or the market capitalization alone will never determine your success or failure.